Hey guys, welcome to lesson 3. It's been a while. Lesson 3 is called Fibonacci Retracement and Extension. I didn't make any notes for this lesson, so I'm just gonna take it as it goes. So what are the Fibonacci retracement and extensions used for? Uh, Basically, what we use them for is to find support and resistance levels. It's just another way to find them. So once you have that, and let's say horizontal supports and resistances, so like um, this would be a support now, if we come back down to it, and we have the most recent resistance, which would be on the daily chart around this level here. So let's start with the retracement. Actually, obviously, these waves are not good anymore. This wave 5 should come all the way up, actually, like this right here. So basically what you want is you want to take an entire structure, assuming this is the top, so 1234 would be the top. On TradingView, you come in here, and your first icon right here is fib retracement. So I have my most common ones, they're pegged right here. So what you want to do is you find the bottom, again, assuming that the 5 waves are done. You start at the bottom, and you bring your 0 up to the top. This will give you a series of, at this point, there would be supports. So you have a 5-way structure here. I'm not convinced this is over, by the way, but let's just make it as though it is. This is Tesla. See where we drew this support line right here? Well, it aligns with the 55 fib, so I'm expecting this to be a pretty good support. But as most of you know, I mean, uh, the golden pocket between the 618 and some people use 6.5, but I use the mark of the devil, so whatever. Yeah, assuming this is done, let's just zoom out just a bit more. And you would come down here and make an ABC, maybe something like this, like up to 618 and all the way back down into the golden pocket. This would be a perfect ABC correction. I'm not saying that's what's going to happen, but who knows? And it could take a while. Like once this entire structure is done, then you redraw these lines, you mark out your horizontal support and resistances. Because you see here, this 475 late last year used to be a huge resistance, and it has not been tested yet. So on the first retest, I expect this to bounce a lot. So yeah, a bounce between 475 and 560. That's a huge range. I'm expecting this to bounce too, so I don't know. So yeah, that is for retracement. We can go and see maybe Bitcoin. I already have some structures drawn out here. So let's just take there's not enough history on this one. Let me just move to this one. Something like that here. Okay. Actually, I'll just redraw these when I need them. Okay. So what you want to take is you have this move up to 20,000 in the first bull run. You have your A. No, this is it, right? A, B, and C right here. It is not a triangle. So you have your 1, your 2, 1 of 3. This actually all of this is 3. So let's see here. Doesn't matter where you put these waves. Like you can't place them without drawing your support and resistances and your fibs. So I just place them wherever for now. So basically what you want to take is the entire structure. So you have some subwaves right here. This is 1, 2, 3, 4, and 5 is not done yet. All right. So you want to take an entire structure, which in this case I'm going to take, you know what? Let's start with wave 1. Wave 1 always has a nice deep retrace. So let's take that one. Start at the bottom of the bigger wave, wave 2, up till the top of 1, and boom, you got a 90% retrace. This is the COVID crash. So yeah, not a lot of people use this fib mark, but it's actually a last ditch support line that a lot of coins bounce off of. So you want to, I wouldn't put an Odin zone there. That this is purely a Blood Eagle zone. So you have your Odin zones around 0.5, and the golden pocket, and the 786, and you have way down here your stink bid zone, 90% retrace. So yeah, so that's for wave 1. So you figure the rule of alternates in Elliott wave, your wave 2 retraces a lot, so your wave 4 should retrace less, 0.5 or less. But I think it hit it on the mark. Let's see here. Bottom of 2, top of 3. Yeah, 0.55 was a big support. Now, yeah, that still corresponds to the law of alternates. Actually, I should have seen that coming. I didn't, but that's fine. I mean, you need to learn from what happens, you know? So yeah, so the retrace of wave 3 was 0.55, and it hit through it 4 times, 5 times before it bounced on the weekly. So we were here for a long time, 5, 6 weeks. And yeah, continuing the bull run, which is actually starting to tire out a bit. I don't think we're still not at the top of wave 3, but this candle needs to close in a different way right now. I don't like it at all. So yeah, um, so that's for Fibonacci retracements. Like these levels are all standard: 236, 328, 0.5, 618, 786. Those are the big lines. The complementary levels I used to create the zones. So yeah, right. I probably had a big bounce zone around here back in, I think in May or in June. I was calling for 24K. It didn't happen, but hey, it happens. So yeah, that's fib retracement. Now, fib extension. This is maybe a more exciting thing because you can predict where a coin is going by extending the fibs. So the fib extension is just underneath fib retracement. I also put this one on my bar. So what you want to do is you take the bottom start of a structure, then you go to the top of the structure and then back down. So you basically cover 2 waves, 2 moves, and the resulting table gives you the fib extension. So you see we have an extended third wave right here, which does mean that wave 5 could be truncated, which if we look at this weekly candle that's about to close, if it closes this way, it could be really bad news, but let's see what's going to happen. So yeah, that fib extensions are good for measuring the strength of a move compared to another wave. You can also try to predict, let's say wave 5, which is often in traditional markets, you're going to see a wave 5 equivalent to the length of wave 1. Obviously here, if we extend it up to the bottom of wave 4, a 1-to-1 with wave 1 only gets us to 40K. Obviously, we're up to a pretty important fib level here. I'm not sure if you've been following me, but I did call for at least a 75K Bitcoin at some point. I don't know which post that's in. I've been posting a lot, so yeah, I think we're gonna make it here. Um, yeah, so I don't use fib extension nearly as much. I use it for confluence, but I do to to get try to get the top of wave 5. I'll use fib retracement of wave 4. So here in this instance, it's sort of reverse. You take the top of wave 3, you bring it down to the bottom of wave 4, and these 3 lines here is what I'm looking at. I mean, 1-to-1 on a wave following an extended wave is the minimum. So yeah, we have this here. See, this is another piece of confluence that makes me think that Bitcoin might be in for a rough time soon. But if it makes it past here and gets up to the 1618, the 2, or my favorite 2.72, this number has also been on my mind, 110K approximately. So yeah, I used the 272 fib retracement level to estimate the top of wave 5. Let's see, time will either prove me right or wrong. But I'm pretty sure we hit one of these 3 before we go back down. Again, depending on the weekly outcome. So yeah, that's it. It's just basic stuff for now. I'm not going to explain what Fibonacci is or why it's so important. You guys want to know how to measure retracements and extensions. So that's what we covered today. If you have any questions, you could just ask in the comments. Join us on Discord. Come get your free trial at the Foundry. We offer a 5-day trial. We talk about this stuff all day long. So yeah, give me a like, give me a follow, and yeah, if you have any questions, just let me know.